Since the financial crisis of 2008, the finance industry has undergone stringent regulation and reform. Here to discuss the costs and benefits is Josina Kamerling of CFA Institute. Well, Josina, since 2008, we've seen a huge amount of legislation on financial services issues. Talk me through the main changes.
In Europe, the main changes have been on the banking side and latterly on the securities markets. And there have been about, since 2008, 40 plus bits of regulation passing, which some people call it tsunami. It has been a very condensed package with very significant measures on infrastructure, on banking capital, and even an attempt to look at the shadow banking area. We are not there yet. The problem is that all this regulation has been done in such short time that now in the implementation phase, regulators and policymakers and stakeholders are realizing they don't know what the impact is of all this regulation put together. And that's the point we're now, which is a difficult point.
Of course, we're struggling to get out of the greatest slowdown in history, yet we're strangling markets with regulation. Do you think politicians just went too far to appease sentiment at the time?
Yes, but they had no other choice. If they hadn't reacted, consumers would have said, you know, you're not performing your role as a guardian of investors. Specifically with banks, there wasn't much option. There had to be a rescue plan. You can argue that it's a pity that there was nothing in place at a European level, because we're still talking, for example, about a single European deposit scheme, which would help investors trying to deposit their money from Holland to the UK and vice versa, etc. They had no choice, but the unfortunate thing is it has impacted upon consumer confidence, and hence investors are very loath to come into the market. And now we are with the Capital Markets Union plan, which is looking to retail investors and how to get the money from under the mattress. So this is the big question we're facing now.
There must be some pros. What would you say they are?
There are clearer rules in terms of the equity markets, in terms of what MiFID is trying to achieve on the transparency. There is an attempt in the bond market, but we're not there yet with bond market liquidity. This is a key issue that it has to be addressed if you want a significant secondary market. Investor protection rules are moving in the right direction. The problem is there are not many rules at European level. So some attempt has been made, again, in the transparency. So what is the role of a financial advisor on inducements, notably in the UK and in Holland? There have been moves to transparent and cover the whole inducements regime. Whether that is effective still remains to be seen, because it might actually help the wealthier investor, but the lower investor with a smaller part to invest, he will go to low-cost platforms with, again, no guarantee that what he's getting in terms of advice or no advice is actually going to help him. So what we have now achieved is a discrepancy between the wealthier investors and the smaller investors, and that still needs to be addressed, and probably at a European level.
And what have been the economic impacts and indeed cost benefits to the financial sector?
They would argue with you there has been no cost benefit and that they have many costs. I was speaking to some banks, and it's, you can say, in hundreds of millions the cost of implementing MiFID, for example, and we're not out of the morass. I was at an ESMA meeting yesterday, and you know, everyone is discussing there has to be delay in the implementation of MiFID. But again, that creates uncertainty and extra cost. So at this stage, stakeholders feel that the sooner we advance and that we sort of clarify the situation, the better you know, we can have an attempt to sort of restart and kickstart the market.
Of course, another major concern has been different financial regulations globally, and so the banking union also came out of all this. How effective do you think it's been so far?
So the banking union, I think, has been very effective. It requires further work, and I think it's about 130 top banks that are being monitored at ECB level, and you start to have a European supervision. We need that in the securities market. We do need a stronger centralization. It is difficult because you have national sensitivities, and specifically in the securities markets, this is an issue.
And how has a single rule book for the European banking sector worked out? And how does London fit into all of this?
London is a key part, and as you know, it's the centre of the financial markets, and yet the single rule book has come from continental Europe. And I think this is a problem that we are facing in general within capital markets and banking, is that there is this dichotomy between London as a financial centre and independent in a way from the rest of the EU, and London as a part of a union. The added factor that it's not within the Eurozone does not help. I would say that we need clarity in terms of what is going to happen if there is a Brexit.
So finally, how does the EU banking industry stand today compared to other major markets?
I think what we suffer from is that there is not a single rule book across the globe. So we have seen that, for example, the Basel rules have been taken within CRD4, but not all of them. And we have seen also that, for example, in the US, banks have cleaned up their bad loans significantly earlier than we're doing in Europe. And we know that in Europe, non-performing loans still remain a key issue, as we've seen in Italy. So there's a lot of sort of dust under the carpet, as I would say, that we need to clear up. If we compare banks where we are currently versus the US, I think there is a disadvantage. And this is also why banks are turning to the shadow banking arena, like peer-to-peer lending and crowdfunding and loan origination in asset management, to try and stimulate somehow, because there is a stranglehold for the moment.